Morning everyone, this is Rajendran here from Market Calls and welcome everyone to Tradezilla 2016 Daily Market Commentary, and thanks for your time as well for being here. And today we'll be going to discuss about lot many concepts, and we'll be having an discussion about global sentiments. We'll be getting into the open interest lookups, and we'll be getting into the trading indicator sentiments, right? So prior to getting into the event, I just want to do a little sound check. So if you are able to hear the sound and the audio video is good, then just raise your hands, right? Okay, good. So yes, we are all done. So if you are very new to Market Calls, Market Calls is an blog which focus on trading analysis softwares and trading analysis strategies. So we used to keep a lot of open source strategies online. And personally, I'm a system trader. My name is Rajendran, and I used to trade since 2006 onwards, and I converted myself into a system trader since 2010. And very recently, I'm experimenting with a lot of discretionary trading strategies. Since last 1 year, and I run a website called Market Calls, and I'm into financial services startup. So Market Calls is now an Market Calls Financial Services Private Limited, right? So if you want to know more about me, there is a link down here, so you can go down there and you can get to know more about Market Calls and about me. And so here we are planning to conduct an one complete month of mentorship program, right? So it's basically you'll be learning stuff like AMI Broker AFL programming, Ninja Trader, and you'll be having an hands-on experience with market profile. And of course, we'll be predominantly focusing on AMI Broker AFL programming, AMI Broker concepts, and market profile, right? And we'll be having an exclusive trading room. It's a live trading room setup where the market profile indicators will be running live, and all the commentaries will be happening in a Slack chat, right? So you can interact with not only with me, you can also interact with the fellow participants. You can ask questions, share charts, and of course, that's how the conversation happens over there. And of course, we have a market commentary on every trading days, right, during the April complete month, and almost some 15 plus webinars. All the webinars will be exclusively done by me. Everything is live and everything will be recorded, and all the recording access will be provided to you for next 6 months, right? So, and we'll be having a couple of sentimental tools, right? And I'll go through that sentimental tools. So those tools are live tools, so where you can see some of the exclusive indicators from Market Calls, and so that will give you a fair idea about which direction we could trade, right? So this is all about Tradezilla is all about, right? So we are going intensive because prior days we used to conduct workshops twice or thrice a day, and we feel that some of the participants are not able to grasp things. So we want to do something intensive, right? So which benefits the traders as well, right, in the long run. And of course, I guarantee you that whatever we discuss, it will be full of quality contents over there, right? Okay, let's get into the global sentiment. Yesterday, of course, market came down. Too many selling pressure in the market yesterday, and market fall down almost 1.60, especially the Nifty. It closed at the Nifty spot closed at 7048.25. Right, almost fell 114 points, and if you look into the Nifty future charts, UOD charts, you would have seen an engulfing, bearish engulfing pattern, right? And VIX, there was a small bump over there. VIX got improved at 2.99% and almost closed positive. And the USD/INR, of course, it's at closely about 68.38. Still, anything above 68, the sentiment is bearish for the market so far when comparing with the USD/INR. And the Asian markets, this snapshot has been taken around 8 o'clock, right? So the Nikkei was down 91 points and almost down 0.57%, and Hang Seng and SGX are so far trading positive. And SGX is so far trading mildly positive, some 9 points up from the previous day's close. Right. So, and S&P 500, the US market sentiment was quite good yesterday. So they closed positive almost 1.65%, and S&P 500 was up by 30 points. And if you look at the Dow Jones was up around 222 points odd. Right. So European market was quite mixed yesterday. So DAX and CAC ended negative, and the CAC was ended negative marginally, and FTSE closed 0.65% positive. Right. So this is what the sentiment. We have a mixed view of sentiment so far with the market. Even though yesterday Nifty had closed negative, let's see what the participants are trying to do. So understanding why we need to understand the participants. This is a basic question anyone could ask. So understanding the participants is like understanding what your competitors are trying to do, what other people are trying to do, right? So basically we look into the open interest lookup to understand what the participants are trying to do in the market. Right. So if you look at the picture, this is the open interest picture. I mean, where you can see the blue represents the calls and the red represents the puts. Right. So if you see you can see a lot of blue histograms over there. Means most of the people are writing the calls. How we come to know that they are writing calls or they going naked puts? We can come to a conclusion from the participant-wise open interest, right? So here is the participant-wise open interest for the clients. So this was client index futures. Clients index futures. The blue line represents the blue line here, which represents the Nifty, right? So what happens? Nifty is keep on falling down since. I mean, it's keep on falling down for a long time, but the February month so far a downtrend here so far, and the green line represents the index shorts. The clients represents nothing but the retail traders, right? The retail traders, it could be a mixed combination of smart and dumb retail traders, right? So what they are trying to do, they're having a mixed emotions here. They are sometimes they are going longs and they are having shorts. So there's a mixed crowd in the retail sentiment, right? So the retail trader is not confident about their position because the market is so volatile. So sometimes they are thinking of going long, and then the next day they are thinking of short, right? Because the market volatility is so, it makes them so confused, and then they're not able to take a constant solid decision. I mean, as a whole, the retail trader as a whole, they have mixed views over here. Some people are thinking bullish, some people are thinking bearish, right? So far, the February month at least, they have a very mixed view, especially when the volatility is high. They are having a mixed views. They are going long, short, long, short. They are not confident about the crowd is not confident on a whole, right? And let's see what the FIs are trying to do. This is FIs index futures. FIs are constantly increasing their longs for last 2 days, and of course they are increasing their longs since expiry, right? And they haven't done any. They are slowly reducing their short position. They are slowly reducing their short position, and last 2 days the long build-ups in futures by the FIs are really huge. So they are trying to accumulate in every downfall, right? We also look into the open interest sentiment from the index options. If you look at the index options, the clients, I mean the retail traders, they're going on naked calls long. They're going on naked calls long. Okay, so this could be possibly, and they're longs. They're in long since the start of the February series, right? So somehow I don't know why they are keep on going long on calls and still they are maintaining it. But there are also some smart people. They used to write options, and of course these days the retail traders write more than 50% of the options. I mean, out of the total options, retail traders are the one who dominate writing options, right? So again, you can see the retail traders are keep on writing both calls and shorts. The violet line and the red line represents the call short and the put short. I mean, so far they are writing both put short, and then the red line represents the call short, right? So so on a whole, overall, still the retail traders are bullish on the option side, and also they're also equally bearish as well. That's what the put index open on the option index put chart represents. Right. One thing they are not doing is they are not doing put long, because a mature retail trader was advised that writing an put option is dangerous. Right. So I mean, writing an I'm sorry, going naked in put is dangerous. So, but what the FIs are doing, FIs are holding put shorts. FIs are holding put shorts, and then sorry, the put long. They are holding a naked put longs. They are holding naked long positions. So these are the net positions, right? So it doesn't mean like they are blindly keep on going naked long. It could be some combination of strategies. It could be a butterfly or an iron condor sort of strategies, but on a segregated view, they are holding an I mean, if you look at the broader picture, I mean, if you want to see the segregated data, what what position they are holding, right? You can see a lot of put longs in the system so far still, right? I don't know, still we have only 7 days in expiry to end this February series. How long they are going to hold the put long? Are they going to extend till the expiry? I don't think like put longs can be extended till expiry, right? So somewhere they have to unwind this. So yesterday there's some unwinding is seen in put longs, whereas they are going still call shots. Most likely they are holding the call shot uh, since the start of the series, right? So both the retail traders are writing call shots, and one thing you notice, they're not very much confident about their put shots. They're not at all writing put shots, of course, in the last at least 1, 2, 3, 4 months. Since November, I haven't seen them writing puts. FIs are not these days writing puts. FIs are these days going put longs at least for the last 5 months, right? To my observation. And retail traders are doing the other side. The counterparty is retail traders. Every time you do whatever the way you think, and you analyze whatever the way you are think, you always end up trading against their FIs, right? So most of the time we end up trading against them. The retail traders most of the time end up, I mean, as a retail trader as a whole, most of the time they end up trading against FI positions. And sometimes retail traders win, sometimes FI wins. And I'm not denying that. So it is a business, right? So of course, if one is going to win in every game, right? So if say FIs keep on winning the game, there won't be a long-term business for them, right? So sometimes the FIs will win, sometimes the retail traders will win. But the FIs will ensure that whenever they are winning, they win big, and whenever they are losing, they lose small to the retail traders. So, right? That's what it's happening. Every major rally they used to win the game, and when during the counter rally they tend to lose, especially during their option positions. Right? During option positions, whenever there is a counter rally, the retail traders are tend to be right. So as of now, they are writing both call options and put options, and then FI index options. So far, they are right in the downtrend, right? So if any counter rally is going to come up, they're going to lose from the option point of view. But you can notice that they are a little smart in index futures. So far they are continuing their longs, and most of the times the index futures, client index futures are most likely to be an most of the times the client are going to lose in their index futures on a net short way, on a whole. I'm talking about on a whole. I'm not talking about the individual client traders, right? Yes, if you ask me, yes, on the option side, both the retail traders and the FIs are quite intelligent. Again, but FI takes the most, and the retail traders so far are taking the least. Right? So this is what is happening in the market. What I'm seeing is there is too many short in the systems, too many shorts in the system from the option point of view. Both the retail clients are going short on. They have holding a call short, and they are the FIs are also holding a call short and put longs, right? So again, yesterday retail traders again getting into the shorts. You can see that the green line is crisscrossing the orange line. The green line represents the future index short. So there's too much of short in the system, right? So that is what you can see from the figure. You can see a lot of blue histograms, which is nothing but a lot of call shorts, and then of course put longs are there, but only the FIs are writing, whereas calls are written by both FIs and the clients, and clients are still holding a mixed view. They're writing both calls and shorts, calls and puts, whereas FIs are going longs in futures. Right? This is what the thing which is happening from the open interest point of view. Let's get into an top-down approach, right? So this is the thing which we do every day to understand what is the underlying trend in the market so far. Right. We'll start with the monthly charts, and then we'll get into the weekly charts, and then we'll get into the daily charts. And yes, this is the monthly future charts of Nifty. What you're seeing is an Nifty is in the downtrend since 2015, of course, from May 2015. And last 5 days, we are seeing a continuous a lower low and lower high formation. Last 5 days, the markets keep on coming down. We call it as a one-time framing. Means the sellers are continuously keep on selling every month. This doesn't happen anytime back. At least in the last 10 years, there is no. I'm not able to see visually continuous 5 weeks of selling coming in, right? So continuously 5 weeks of selling in, we're constantly making lower lows and lower highs. This is the very first time we are observing on the monthly charts, right? Otherwise, we have seen such patterns on the bullish trend, but bearish trend is the very first time, right? So one time framing, people are doing only one thing: selling, right? So it doesn't mean like we have to enter into a sell mode and then sell now. It's really very late when one time framing is especially happening. There is a tendency that it could mean revert, right? So we are seeing this pattern again and again. Of course, yesterday, the weekly charts, again, the overall trend looks like it is getting down. And what is happening on the daily front? What happened? So in the last my last daily commentary, we noticed that on the daily time frame we are doing in one time framing, right? So 1, 2, 3, 4, 5 days, they continuously keep on moving down. By that time I was doing in one time. By that time I was doing the webinar. We are seeing in one time framing on February 6, 7, 8, and 9, right? And 10th again we got down. So that is almost 5 one time framing happened, and then the market reversed back, right? So market reverted back in the sense, the one time framing finally came to the end. Finally, the market made an higher high and higher low, right? So that's what I'm saying. Any one time framing is keep on coming. It's relentless. It will stop, and then the market will try to do something else. Either it could get into the consolidation mode, or it could get into an trend reversal sort of. So the monthly so far are indicating an sell mode, and then weekly it looks like again we are in the sell mode, but monthly we are seeing in one time framing, right? And daily it looks like we are some sort of in the consolidation zone so far. It is to me there was a trend, but the trend got stopped now, and then I'm talking about the whole picture, right? So I'm not talking about yesterday. I'm talking about the whole picture. The whole picture says we are in some sort of congestion is going on right now. We are going in. We are seeing a mixed views here now. The big downfall followed by a big uptrend, and then again a big downside. So we are in some sort of congestion zone. Market always do two things. It moves from congestion zone to trendy movement, and then trendy movement again to congestion zone. And so far, again, the picture to me looks like we are in some sort of a congestion zone, right? And again, Bank Nifty is looking the similar stuff is happening over there. We are still. It looks like we are in the congestion zone. And let me look into the trading sentiment. The trading sentiment is the one we used to look into before getting into the market every day. The trading sentiment is so far holding positive. How I am saying it is trading positive. So we use an indicator called Zurich RSX. So Zurich RSX It's a paid indicator. You can get it from zurichres.com. It's a highly responsive indicator. It suits generally for a mean reversion sort of traders, right? Especially if you are into discrete trading. I mean, one good tool compared to your stochastic or an RSI. It's a highly smooth and responsive indicator. It doesn't turn faster. If it is turning up, most likely it turns during the tops and bottoms most of the time, right? It has whipsaws as well, but compared to the other any traditional classical indicators, it performs far better so far. And what is happening here now? The indicators keep on coming down on declining mode right from February 7th. I think from February 6th. I think February 6, 7, 8, 9, 10. It's keep on falling down. And don't look into the colors. The colors doesn't mean anything over here. What we are looking is from the reversal from the peak and reversal from the trough, right? So what is happening now? You are seeing a reversal in the sentiment. So the daily sentiment is getting positive. So whenever it is getting positive, it try to do some sort of currently it is turning positive. So there could be a potential positive action might be coming in as long as the trend remains positive, right? So the similar stuff we are observing in the Bank Nifty as well. Bank Nifty, the sentiment turned positive 2 days back. That's on Monday. And again the trend is still so far continuing, right? It doesn't mean like Nifty could make a newer low or Bank Nifty can make a newer low. So as long as the sentiment is holding positive, we look for an positive opportunities. We look for long opportunities, right? So the EOD sentiment we use as an part of our discrete trading decision, whether we have to go in line with the sentiment or we have to trade against our sentiment, right? So at this point of time, I'm not seeing any too much of emotions on the long side. I'm seeing too much of shorts coming there, right? So too much of shorts are there in the system. How I'm saying that, let's get into the profile chart. So before getting into the profile chart, let me show you something. So we used to have an Slack sort of charts where you have multiple channels, right? So we used to discuss all of the questions, all the charts, everything will be posted over here, and you can ask questions and then you can interact with the participants. So this is what we use to do an conversation among the participants during the live webinars or even after market hours. And we also have an sentimental analytics tool. So sentimental analytics tool, it updates during market hours. So currently we are running for Harley and we are running for Harley and daily charts, right? So we are having a bunch of stuff for the stocks as well, right? And we also have some sentimental scanners. So let me show you sentimental scanners. Some bunch of sentimental scanners. Okay, so we have an daily sentimental scanners, weekly, and of course hourly. Right now the market is not open. So once the market opens, we'll get to see some extreme sentimental scanners. So it gives you some idea about where the extreme sentiment is, and then it helps you in taking in discrete decisions, right? So all those stuff will be discussed during the Tradezilla event. And let me get back to the market profile. Let me get back to the profile. Okay, so here you can have an access to the you can have an access to the open interest tracker, right? So the open interest tracker is a tool where everyone can access it. I mean, it's not restricted to the members, right? So open interest tracker and participation OI, we are updating regularly. So by 5:30 you can see it out and can see what the FIS clients are doing it out. So all these tools are kept open. So the interactive charts is where you can see live access to NSE cash, futures and FX charts, right? So let me get into the market profile and we'll get into the key reference levels, right? If you have any questions, you can ask me so that we'll discuss about market profile. Anyways, let me take some questions now. So if you have any questions so far, you can ask me right away. Otherwise, we'll just get into market profile and we'll ask some questions. So Manjunath asked, can you please mention the sentimental indicator you used? So I'm using an Zurich RSX as a sentimental indicator. So we have certain rules when to trade in line with the sentiment and when to trade against the sentiment, right? So at this point of time, I'm trying to trade in line with the sentiment. So we use hourly sentiment and as well as daily sentiment. Daily sentiment is to generally for positional trading purpose, and hourly sentiment we use to measure uh, for intraday trades. Right? Sometimes we go in line with the sentiment. Sometimes we go against the sentiments. Any other questions? Okay, then I can. Okay. Can this Zurich, Mr. Datta asked, can this Zurich sentiment can be used for smaller time frames also? I personally tried on hourly sentiment, and I'm also trying with 15-minute sentiment when the volatility is really going to be huge, right? I mean, 15-minute, yes, you can expect a lot of whipsaws, and hardly the whipsaws are very less. I'm using it for intraday purpose, especially in combination with market profile. Some people use VWAP, and some people I've seen they are using McClellan indicator as a sentiment, right? But I'm using Zurich RSX as a sentiment. Yeah, it's Zurich, Jurik. It's Zurich RSX. Yeah. So I guess Mr. Dutt and Manjunath, that answers your questions, right? So we use Zurich RSX as an sentimental indicator to understand which direction we have to trade. Sometimes we go in line with the sentiment, and sometimes we go against the sentiment, right? So we have a couple of rules over here to trade, when to trade in line with the sentiment and when to trade against the sentiment. Fine. Okay, then let me get into the market profile. So, every day during the market daily commentary, we'll be discussing mostly about the underlying what are the possible key reference level where the market could auction, what are the high probability zones, and what the players are trying to do in the market. Like this is what we'll try to analyze in the market profile sentiment. So you're seeing a lot of lines over here, right? So these are the lines are most likely to be, these are the reference level. I'll say these are the key reference levels. So we used to map all those key reference levels. So let me come down what happened from the top, right? So right from the series, I'll come down. So you can see a lot of numbers, letters over here. All those letters represents the market movements, right? So you can see a bunch of distributions. So each distribution represents and the day's price action, how the day has been, how the price has been moved in any given day. And if you want to ask me a little bit, I can split out the profile. I can split the profile. Right, you can see something like a candlestick sort of pattern. Right, the letter A represents the first half an hour of activity, and letter B represents the second half an hour of activity, and C represents the third half an hour, and so on. Right, so if I combine all these things to the left, you can see a distribution. The distribution most of the time looks like an Gaussian bell curve, sort of. Right, that's what you can see. The market doesn't keep on moving in one direction. It moves up and down, up and down, up and down, and then it does the movement that way. That's what we learn. One can learn from the profile, right? So, a profile, by reading into the profile, you can understand what other participants are trying to do, right? How much emotions are there in the market, and when we need to trade against them, when we should not trade against them. So these are the things you can learn from the profile, right? And let me get into that now. Okay, here. So let me show you what I can zoom in the charts. I can zoom out, right? As well as I can equally move up and down. I can move the charts up and down, right? So it's not like an typical classical charts. It's not time frame based charts. It is not Elliott wave based charts. It is not point and figure, right? So if you want to learn market profile, you need a lot of time and energy effort. You have to take a lot of effort. And of course, I mean, 1 month of course, I can give you an broader overview if you are trying to sit with me and if you are trying to understand with me. But of course, it's an you need to put tremendous energy to understand how the market auctions and where the market is more likely to go, right? So yes, I'm also in experimental phase. I'm last 1 year I had taken it very serious, but otherwise I'm experimenting this for last 2.5 hours, I mean 2.5 years, and we are running a small fund on top of market profile, right? And let me get into this. So let me start with the February contract, right? So the February contract started something like this. So we topped out on 1st of Feb, and then we started coming down. You can see a red bracket that represents the value area. Right? If you see the value area is keep on the value area represents the 68%. Generally, the people use 70, but I'm using the default settings over here. I'm using 68%. The 68% zone is where the most of the price got traded in that. So this is the zone where the 68% of the price action was done in this zone. And you can see that the value area keeps on moving down. So whenever the value area keeps on moving down, you can see there's a high probability that the trend is keep on shifting on the downside, right? So the trend got shifting down. On third, it got moved completely lower, the value area, and the value area overlapped again, and then you can see the value area started building higher and higher and higher again, right? So we seen some sort of counter rally coming from 4th, 5th, 6th. We seen some counter rally, and followed by the 6th, from the 9th onwards, we seen an value area started coming down, and again the Zurich RSX sentiment turned completely negative on that day, right? So one thing to be noted, we seen something called a poor high. We call this as a poor high, right? So we call this as a poor high, and there was a gap left in the system. So we use this as a reference level. Gap is an interesting reference point from a market profile perspective. So I am marking this as an interesting reference level. So poor high is where you can see only one TPO at the peak, and then followed by the poor high generally represents the end of old business, and new sellers are taking the control in the market, right? And again, the very next day, we seen a gap at 7295. That's a one small 1 point gap in the market, right? So again, that was a reference level to me. And if you notice, there was a small rectangle over here. So small rectangle represents where the maximum number of letters are traded. Letters in the sense we use a term called TPOs. Each and every letter is nothing but a building block of market profile, and we call it as an TPO. TPO is nothing but the time, price, opportunity, right? So you can see whenever the TPO size is more than 10, so the POC, the point of control, is going to be more than 10. We'll call it as a prominent POC. So whenever the prominent POCs are there, it's more likely to be revisited. So we have the prominent POC has a tendency, the price has a tendency to revisit the missing untouched prominent POCs. Right? So far the price has been touched 7326. So I kept this as another again as a reference level. And again we have a gap as a reference level, and one more prominent POC is 7255, right? And then market again keep on shifting down with then value area keep on shifting down and down and down. So what happened? We have one more interesting reference level here. I'll explain what it is. This is a reference level. I marked it. So to me, it looks like a mechanical selling coming at those zones. So mechanical selling in the sense, you can see at this price, whenever the price is breaching this zone, the selling comes in. Again, on 15th, you can see that price touched this zone and then comes down. Again, yesterday, price opened above, but still it's not able to sustain, and then it come down. So it's a mechanical reference level to me. So we are also observing the same thing again and again and again. Like whenever there is a mechanical reference levels are there, so we use as an we mark those reference level. So those are high probability zones that the level will be touched again, right? So whenever we are getting acceptance above 7196, and the price is going to trade above that, you can see a complete trend reversal coming in the markets, right? So again, we are having an if I split this profile this particular day, right, I can see the intraday movements here. So we are having a matching F and I. You can note the letter F and I. We are having a matching highs. So again, it is sort of a weaker reference to us. So it's more likely to be revisited, right? And on the downside, we have an not much reference level, but yes, we have some reference levels. We have some reference level. We have one more prominent block here. It's almost an prominent block, right? And we are also having a poor low here. We call it as a poor low at 7040 and 6983. So we are seeing too much of reference level, especially on the top. I'm seeing too much of crowded reference levels. How many reference level? 1, 2, 3, 4, 5, 6, 7. So total 7 reference level I'm seeing in. So what are those reference level represents? Most likely the people are willing to keep their stops at those zones. If you ask me, yes, probably it could be an too many players are willing to keep their stops at those zones. So whenever people are keeping their stops over there, most likely to be hunted down, right? So people can feel the pain when the market is going to move at those zones, right? Whenever I'll call it as a stop loss clusters. It more likely to be an stop loss clusters. Not every time, but whenever I'm seeing the reference levels are getting so compressed, we don't see every time we don't see these many number of reference levels on the top side, right? So at this point of time, I'm seeing too many reference level on the top, right? So it means most likely the players are keeping their stop loss, and it's so visible to us, right? And if you ask me, the market is bearish. Yes, the market is so bearish. Every time frame, every indicator is every classical indicator is going to indicate a sell so far, right? And I don't think in this world no indicator is going to show upside. But one thing is from the market profile point of view, what I'm seeing now, I'm seeing a lot of reference level on the top, right? It's more likely to be a stop loss clusters. Whenever the stop loss cluster is going to break, it's going to break, right? It's going to keep like going to pop. All the reference level will be taken out. That's what I seen in the past, right? But the classical indicators are more likely to show negative, right? The only thing is the daily sentiment is positive from the daily sentiment. The daily indicator is indicating positive to me. That means the jury sentiment, I mean. And market profile perspective, two things I'm noticing. I'm having an overlapping value area. Right? I'm seeing an overlapping value area, and the value area formed higher after 12th. On 12th, we seen an excess. The market moved sharply 100 points down, followed by a sharp recovery from the bottom. That represents some sort of an excess. That represents the auction current downtrend had come to the end, right? So as long as the market is not trading below 6950 zones, this particular zone, as long as market is not trading below 6950 zone, and the sentiment is going to remain positive, one can think about testing those stop hunting levels, right? If markets are trying to test these levels again, you can easily say like someone is trying to squeeze all the shots in the markets. So someone is trying to flush all the shots, right? So, whether it's a weak shot or a strong shot, we don't have any fair idea. But only one thing from the future perspective is FIs are continuously keep on going long. So if someone is trading shots, they have to be aware about the scenario going in the markets, right? So again, we have an two reference level coming near, right? 7152 and 7200, and anything above this mechanical selling zone that is above 7200, that could be a complete reversal, right? So it's more likely to be happen, but on the downside, I don't know, I mean, how much downside is left, but still, so far the sentiment is holding positive, right? That's what the sentiment indicators say so. And of course, yes, if you ask me, I'm in long. Yes, I'm in long, and I'm not holding any positions in futures. I'm holding a couple of positions in options. And if you have any questions, you can ask me. Otherwise, we can jump into Bank Nifty. Let me take some questions. So what is the data about the longs and charts in Nifty published? So the data is Chinmaya. I think you are asking about the open interest longs and charts, right? It's nothing but the participant wise open interest. You can get those data from here. You can go to the tools, and from the tools you can catch the participant wise open interest. You can get it down over there, right? So every day it's an EOD data. We get it from NSE India, and we'll build some analytics on top of it. So you can get those analytics plotted over there. So the charts are a little interactive, and then you can able to get some interesting perspective about the participant, what the other participants are trying to do. Right. So we look into the participants to understand what the other people are trying to do. What by looking into it, we get a fair amount of edge from the market, right? So we'll come to know whether there is too much long, or too much short, or too much emotions in the market. This is what we try to measure from the data. So any other questions you have? Okay, then let me get into the Bank Nifty sentiment as well. So Bank Nifty. So Bank Nifty, nothing much. We are seeing the same similar stuff over there. So we are again we are having an poor low yesterday, right? So we are seeing an overlapping value area coming in. So we are seeing an overlapping value area coming in, and let me split this profile. We are seeing some GI matching highs over there. So 1339 is an interesting point of view. Again, on the top side, we are seeing a lot of reference level, and again there was a mechanical selling level at 14543. Market is having a high tendency to revisit those zones very often, and we are having a prominent block again at 14669, where we are. So we call it as a prominent block whenever we are seeing more than 10 TPOs. Whenever the distribution is going to say this particular day, 10th of February, you can see almost the letters A, B, C, D, E, F, G, H, I, J, K, L, M. Almost all the 13 letters are there. So we call it as a very prominent block, right? And then we have two prominent blocks left to be uncleared. And again, a lot of emotional selling came on 8th of February, right? So it came with an excess. So it came with an very excess. The excess represents the end of the auction. So it came with an excess, right? So and we have a lot of single prints here. So market tend to revisit all those single prints, if you remember. So again, nothing much. We are again seeing in stop loss clusters coming in those reference zones, right? So nothing different from Nifty, but Nifty I'm seeing a lot of levels, including the gaps. Of course, in Bank Nifty we don't have gaps, and Nifty in the current downtrend it had created two gaps, and all the two gaps has to be repaired yet. Right, and one more thing interesting to be noticed, there was a gap on 15th, right? So market came down yesterday to fill those gap. Exactly, it filled the gap, and then now market will try to do what it do. But one thing you have to be cautious. Like we have a lot of stop loss clusters coming in, right? So really one has to be really careful to if you are betting on shorts at this point of time, especially when the sentiment is holding positive and I'm seeing in stop loss clusters, right? So if you are following charts, I recommend you to have some strategy, have some exit strategy, and then get into it. Don't blindly bet charts in this market, especially when the FIs are getting into the positive trend. Of course, they also lose. As I said, FIs also lose, and retail traders also lose. But FI, whenever they are winning, they make sure that they are winning the biggest trend, right? So, guess we came to the end. If you have any questions, you can ask me. Otherwise, markets, I think markets are opened. So for market, we opened around 7050 yesterday, same zone, right? So there's a high tendency to revisit this zone. Probably market will test this 7040 today, and then it will try to do what it want to do. Let me take some questions, and then we can close the session anyways. If you have any questions, you can ask me. Otherwise, we can wind up. Okay, what maximum upside do you see in this uptrend? Rahul Somaya. So if you to answer this question, I mean, let's say market, if market is trying to revisit this 7120, right? So if market is trying to revisit, more likely it will revisit. It may take some 2 or 3, 4 days, right? It may, or it may take, it may come up by tomorrow itself, right? So whenever it is breaking it mostly it will try to break up on the market open. Most of the time, wherever there is a mechanical selling position or mechanical buying position, it come and take at the market open with a gap up, right? So whenever it is going to cross this 7194, from there onwards you can expect an expiry above 7200. I don't know, we could take most of the clusters points. This is what my expectation is, right? Of course I could go wrong, right? But from the experience, if the market is going to take 7197 at the market open, right, it could happen tomorrow or it could happen twice, 2 days or 3 days down the line. Whenever it is going to happen at the open, it is going to breach, and then we are going to have some acceptance. From there onwards, you can think like 7200 will not be taken out on this expiry, right? So my view is to have an Nifty expiry above 7200. That's what I love to see the market, right? Otherwise, I mean, of course, I'm not betting too much. I'm a little bit concerned about this downfall and the volatility. So I'm betting on naked calls, right? So I don't want to get hurt in this market, especially. So to me, survival is more important than making returns. So any other questions? We can take it in Twitter, or you can mail me. My email ID is rajendran@gmail.com. Anyways, I'll send my email ID to everyone. Host.in, right? So you can mail your questions over there. I'll be happy to help you out. Otherwise, if you want to register for the event Tradezilla, you can go down there. You can have the complete agenda over here, right? So you can go to Tradezilla, and we have the complete agenda, and any questions you want to ask, we have a customer support team that they can help you out in understanding. Right? If you ask me what are the softwares we'll be predominantly using, we'll be using AmiBroker and NinjaTrader, right? So if you're not comfortable with AmiBroker or NinjaTrader, I'm telling you one thing: we will be starting everything right from the scratch. Right from the scratch will be discussed, and so these are the things we are doing, and you can get the agenda over here, right? Yeah. So thank you, everyone. So thanks for your wonderful time to come and attend this webinar. So thanks a lot. We'll see you in the next webinars. Anyways, the next webinar, I think we kept some 4 daily market commentaries such. So we'll be discussing all those stuff. So Tapas asks, what is the maximum fall possible today? Seriously, I don't know, right? I don't know, market could even go completely down. But what I am seeing is there's too much of short in the system. Whenever I'm seeing too much of short in the system, it's more likely to get squeezed, right? That's what I'm waiting for, because we are seeing a lot of reference level on the tops. Let's see, right? So thank you.